But welcome to the third Blue Jay Legal webinar on predicting judicial decision-making with machine learning. This is, as I mentioned, the third in a series. The first two webinars are available in their totality on our website, bluejaylegal.com. So I invite you to check those out if you enjoy the webinar and you're looking for more content. Want to learn more about how to predict machine learning or predict judicial decision-making with machine learning in the tax context, please check out those webinars. They're archived and you can check out what's happened before. Today we're doing something a little bit different. We're going to talk about the most recent classifier that we've added to Tax Foresight, and it concerns directors' liability. And so this just went live a few weeks ago. And so as our newest classifier, it makes sense to make it the topic of this webinar. We'll go through it. We'll kind of talk about a very concrete scenario, how you might use this to come up with a prediction about how a very specific kind of fact situation would be likely resolved by the courts based on everything else that has already been decided. And that's really the power of Tax Foresight. How do we make predictions about new ambiguous situations? And in this case, we're going to be talking about whether or not directors of a small, closely held company where they haven't been able to make employee payroll remittances to the CRA, so their amounts withheld at source, they haven't been remitted, and the company is then in an insolvent position. Can the CRA successfully pursue those directors for those unmade remittances? And we'll examine whether or not those directors can lay claim to due diligence defense under the Income Tax Act. So that's the goal for today's session, and I'm going to walk you through how that might work and how that would go. Okay, so my name is Ben Alarie. I'm co-founder and CEO of Blue Jay Legal, and I also hold the Osler Chair in Business Law at the University of Toronto at the law school. And so it's really my pleasure to be taking you through this and exploring this with our participants today. Maybe just a little bit of context and background about where we think Tax Foresight fits into the evolution of legal research tools. And I've said this before, but this computational stage in research is really growing out of and is made possible by the earlier transition from analog to digital materials. So up until about 20 years ago, almost all legal research, tax research included, was done using hard copies of books, journals, reporters, loose leaf publications. People had to have paper with words written on them. And then things started to change quite a bit. So things started to become digitized, available on the internet, on DVDs, now increasingly on mobile applications. TaxNet Pro, which is a software that Tax Foresight is integrated with, is a great example of a digital library, a digital repository of relevant and new materials that tax researchers want to look at in figuring out how to advise their clients. And the fact that we have those materials available digitally is really something that is a precondition to moving into the computational realm of research. And what does that mean? Computational means we're basically using predictive analytics, machine learning algorithms, and narrow artificial intelligence to make predictions about how, in our case, how courts would consider or address new fact situations based on everything that's come before. So really, our goal with Tax Foresight is to really pursue the promise of the common law, which is the ability to synthesize past judgments and treat like cases alike and potentially different situations differently. And so that's what Tax Foresight is all about. And we've been marketing Tax Foresight since early 2017 with Thomson Reuters. Been really thrilled with the take-up and the adoption, and we've heard a bunch of different things from experts who are using Tax Foresight in the field. And our basic takeaway is that our users are using Tax Foresight to produce the highest quality advice that they can. So it's a way to complement their own judgment. We've heard things, and these are just a few sample quotations from those who are using Tax Foresight. one is our firm needs this tool. The ability to find similar cases so quickly is a great feature. Another user said the list of questions pointing out key factors is helpful. As litigators, we often forget to consider and grapple with each relevant factor equally. A final commentator said, I was impressed that the explanation was so well written and was machine generated. The similar case feature is something I didn't know I needed until I saw it. And so all of these users are essentially saying, look, this is really great as a checklist to help make sure that I'm actually turning my mind to all the different relevant considerations that judges are going to consider when they address these sorts of ambiguous questions. It also points to the key resources that support the decision, whether it's an explanation kind of exposing how the underlying machine learning algorithms were considering the case, or whether it is pointing to the cases that are actually kind of lying behind the algorithm. Either way, it allows tax professionals, whether you're an accountant or a lawyer, to produce even better advice. The second kind of reaction that we have is that folks find it valuable to have a double check on their intuition. So a lot of longtime practitioners develop a feel for how the courts think about things like income versus capital, or whether gross negligence penalties might apply in a given situation, or whether someone departing from Canada has done enough to sever their ties, their residential ties with Canada, to be characterized as having established residency somewhere else and having left their tax residency in Canada behind. It's really nice to be able to double check independently your intuitions about how an area of law works, especially if you don't do it all the time, if you're not extremely well calibrated to all the latest judgments that are coming out of the courts. And in a lot of areas, this is really a significant challenge. So in some areas of law, you'd have to read hundreds and hundreds and hundreds of cases to be up to speed on all the relevant judgments in an area. And it just takes a very long time for professionals to get that intuition about how the courts are really deciding cases. So Tax Foresight makes that possible in just a few minutes. And we're going to see an example today with the director's liability classifier that's on our platform. Okay. Third thing that we're hearing is it's really useful to be able to document your due diligence. So you can demonstrate your due diligence using Tax Foresight. I'll show you how you can produce a report using Tax Foresight that basically comes up with an explanation of the analysis, all the similar cases, a prediction about how a court would think about a given situation. This is really helpful to avoid situations perhaps involving potential professional liability. If you're providing someone with advice and you can document that you went through a relevant checklist of all the appropriate considerations, and you know how they play off one against the other, and you can show that you ran through that analysis in conjunction with giving advice to a client, that's going to be very, very helpful to you should there ever be questions raised in future about the accuracy of that advice, or just how accurate that advice is that you're giving to your clients. That can be very, very helpful in furthering the client's interest sometime down the road. Finally, one of the things that we hear is that our users really appreciate being able to quantify the risks for clients. So being able to drill into an issue and very, very quickly identify, okay, this is risky or this isn't risky, is very, very helpful. And to be able to diagnose the various different aspects of the situation that are likely to be critical in explaining the situation to the client is very, very helpful. So one of the things that I hear from tax professionals, and this is both from accountants and lawyers, is that people are reluctant to be pinned down to a particular number. So people don't want to say, oh, so this is 73% likely that your position is going to be sustained. People don't like doing that. Tax Foresight invites you to be able to say, yes, if we were able to document all of these facts, then and as I'll show you, then probably the best guess is that the court would find in your favor 73% of the time. So you can be very precise with this because you're able to base your advice on all the given considerations, all the cases that have considered those considerations in the past. So you can actually really, really stand on the shoulders of giants, all of those jurists who have considered cases in the past and give a fairly precise estimate. And one way of thinking about this is the way that the tax foresight classifiers work is they're basically pulling the audience of all the judges who have ever considered cases in these areas before and getting a straw poll from all those judges who decided those cases in the past, which is a really fantastic starting point for your future predictions about the future. Okay, so without further ado, let's jump into an example. Let's talk about the director's liability classifier. And so what we're going to do is look at this situation. We've got two co-founders of a company, Bruce and Ethan, and the CRA, as I mentioned in the lead-in, the CRA is asserting that Bruce and Ethan are personally responsible for unpaid employee payroll remittances at ABC Corp. So ABC is a small athletic apparel company. There are 5 employees aside from Bruce and Ethan. Bruce and Ethan are officers, executives. So Bruce is the CEO, Ethan's the COO. They are also the company's only 2 directors. And so they co-founded the firm. In 2014, the 2 of them noticed that sales were slowing, and they anticipated that there would soon be cash flow issues. The company had never before had any tax problems, and Bruce and Ethan had basically always paid all their taxes on time, never had any kinds of issues. In 2015, sales continued to be challenging, and the company began experiencing cash flow issues. So Ethan dug deep into his personal savings and contributed $300,000 to the company to keep it going, so to keep it solvent and liquid. And so they really started focusing their minds on operational issues. So how do we turn these things around? Bruce and Ethan didn't really turn their minds to whether this infusion would be sufficient for the company to satisfy the remittance obligations to the CRA. By 2016, it was really a problem, and the company made an assignment into bankruptcy. And Bruce, as it turns out, just to wring the last few months out of the company's runway, basically just decided not to remit employee payroll deductions for the last several months of 2016 before the assignment into bankruptcy. And he didn't tell Ethan about the decision. He thought maybe they could turn the company around and he could quietly just fix that after the fact. And so the company's unmade remittances amounted to about $30,000. So a little bit more about Bruce and Ethan. They both have commerce degrees. They have prior experience in owning and managing small businesses. Naturally, as CEO and COO, they were both actively involved in managing the operations of the company. Bruce owned all the shares of the company. Ethan didn't own any. Both of them had the authority to make payments on behalf of the company. And at the time of incorporation, Bruce and Ethan had jointly agreed that Bruce would be the one, because he had the head for numbers, who'd be responsible for the accounting, finances, and taxes of the company. So the situation is CRA is coming after both of these directors, Bruce and Ethan, for these unmade remittances. And the question is, who's going to be responsible? Will Bruce be responsible? Will Ethan be responsible? Will they both be responsible? Who's actually responsible for this? Or can they both say, oh, we were duly diligent, and so therefore it's kind of the CRA's problem? Or is it Bruce's problem alone, Ethan's problem alone, both of them? And so what we're going to do is we're going to take these facts and we're going to go into Tax Foresight and analyze what we can learn about the likely outcome of Bruce and or Ethan claiming that they can stand behind a due diligence offense. So I'm going to log into Tax Foresight here. Okay, I'm into Tax Foresight. So what you'll see on your screen is that we have 2 main kinds of functionalities here. We have classifiers and we have case finders. I'm going to look for the director's liability classifier. Here it is. We have a bunch of other classifiers. We have a number of income versus capital classifiers that basically tell you whether something's on account of capital or on account of income on the expenditure side, and also on big transactions. So whether you're talking about trading securities, stocks and bonds, or real estate. We have classifiers on different sources of income, a worker classifier, so employee versus independent contractor, windfalls for gambling winnings. Are gambling winnings tax-free as personal gains, or do they actually constitute income from business? Business versus property classifier that tells you whether rental income would be classified as active business income or investment income. We've got some inclusion classifiers, taxable benefits, shareholder benefits, deductions. We've got the home office classifier, tells you whether or not a home office is deductible, indirect tax. We've got the director's liability classifier for indirect tax obligations. So it'll become clear where that comes in. A number of jurisdictional classifiers. So carrying on business was the topic of our most recent webinar. You can find that one on our website, bluejlegal.com. Central management control classifiers here. Residency classifier is going to be the topic of our next webinar in October, so look for that. Love to have you join us for that one as well. The gross negligence classifiers here, so this is whether or not a taxpayer may be subject to gross negligence penalties. We've got the Section 85 rollover navigator or classifier. We're really going to focus here on the director's liability classifier and the director's liability, case finder. So let's start with the classifier. Okay, so director's liability classifier, I'll just zoom in here, make sure everyone can see what I'm doing here. So basically, we're going to see who, as between Bruce and Ethan, or whether both of them can make use of the due diligence defense here. And how this works is I log in and select the director's liability classifier. It's going to start asking us some questions about the director. And so I'm going to propose that we start with Bruce. Bruce was the CEO and was also the one who made the decision not to make these payroll remittances to the CRA. And then you'll see that we're going to be asked a number of questions about the background, and then some about control, some questions about preventative actions taken by the director, remedial actions taken by the director, and then which legislation, whether it's the Income Tax Act or the Excise Tax Act, that we're curious about here. So I'm just going to start in, and I'm going to answer these questions as if I'm representing Bruce. So I want Bruce's answer. Can Bruce claim that he was duly diligent here for the purposes of avoiding responsibility for the unpaid remittances? And remember, it's $30,000 at stake here for Bruce. So Bruce, we were told, has a commerce degree. Were there any limitations on Bruce's language abilities? No, he didn't have any problems. He spoke English, and he had experience in accounting, finance, or tax, in a supervisory or managerial capacity, yes, and owning or operating a business. There's no evidence that he is a director on another corporate board, so we'll leave that one unchecked. The company here, ABC Corp, is not a public company or a reporting issuer, and it's a small company, so fewer than 10 employees. Was the director suffering from a medically diagnosed condition that negatively affected his ability to function as a director? No, he wasn't. Okay. Now we're on to the control questions. Was the director the sole director of the corporation? No, Bruce and Ethan were jointly directors. Was the director a direct or indirect shareholder of the corporation? Yes, absolutely. Bruce was the shareholder. Ethan was not, but Bruce was. Was the director actively involved in the day-to-day management of the corporation's operations? Yes, as CEO, Bruce was very much involved. Did the director have authority to sign checks or otherwise make payments on behalf of the corporation? Yes, he did. Was the director actively involved with the remittance obligation prior to the remittance failure? Yes, that was one of the roles that he took on as CEO. Were there circumstances outside of the control of the director that made it impossible for the director to fulfill the remittance obligation? So looking at this question, I'm like, okay, well, obviously there were outside circumstances that made it very difficult for Bruce to make the remittance obligation. The real question in my mind as I think about this is, was it actually impossible? And so what I'll do is I'll hover over this tooltip here, and get additional guidance on what constitutes impossibility for the purposes of this question 2.6. And so the tooltip says to qualify as a yes, the circumstances must have been such that it was in fact not possible for the director to fulfill the remittance obligation. The court must be satisfied that but for the existence of such circumstances outside of the director's control, the director would have been able to fulfill the remittance obligation. The circumstances in the case law have included a major creditor appointing a receiver manager, a major creditor bank refusing to clear checks, the development of an unforeseen financial shortfall caused by a major account's failure to pay as agreed, theft of company inventory. So I don't think it was impossible in the sense suggested by that tooltip. So I'm going to say no. Did the remittance failure occur or persist as a result of reliance on incorrect information from someone other than the director? No, in fact, Bruce didn't tell Ethan about the choice not to remit, and even framing it as a choice suggests that this is the right answer, 2.6. So Bruce elected not to make the remittances, and he didn't tell Ethan. So here the answer is certainly no. This answer is probably going to be different when we get to Ethan, or at least we can check it out and see what the result will be. Okay. Preventative actions. Prior to the remittance failure, did the director receive any indications that the corporation was experiencing financial hardship? Yes, he and Ethan were both acutely aware of the financial hardship. Prior to the remittance failure, did the corporation have any failures relating to taxes or the Canada Revenue Agency? Here the answer is no. Did the director make inquiries to another person tasked with the responsibility for remittance obligations? Here the answer is no, because there wasn't another person tasked with the responsibility for the remittance obligations. Did the director make attempts to verify the corporation's bank accounts to ensure that the remittances were made? No, he knew that they weren't made because he didn't even attempt to make them. Did the director establish a separate bank account for withholdings from employees and tax remittances or enact other similar protocols? No. 3.6, prior to the remittance failure, was the director involved in assigning the corporation's tax compliance duties to another person? No, he was involved in assigning it to himself at the time of incorporation. So here the answer is no to 3.6. Okay. Remedial actions. Did the director bring the relevant tax obligations to the attention of others? No. Did he make arrangements with the CRA regarding the relevant tax obligations? No. Did Bruce personally contribute funds to aid the corporation coping with the financial hardship? No. Did Bruce change or restructure business operations to address the relevant tax obligations? No. For how many months did the corporation fail to remit? I believe the facts that we're dealing with suggest that answer is 7 months. And what was the total dollar amount of the remittance failure? I think it's $30,000. Okay, so we're almost done here. Under which legislation did the corporation fail to remit? Well, it was under the Income Tax Act because we're talking about employee payroll remittances. So this would have been the withholding at source of employment taxes due by the employees on their employment income. Okay, when I click compute, what the system is going to do is compare this pattern of facts with all the previously decided director's liability cases. We're talking about hundreds of cases that the courts have decided here, and we're going to get a prediction about how a court would likely assess Bruce's responsibility here. Would Bruce be able to say, look, I was duly diligent in trying to make these remittances, and I just wasn't able to do it as a director, so you cannot come after me personally for the $30,000. So I'm going to click compute and see if he can claim this due diligence defense. Okay, so pretty strong prediction here that it's going to be very, very difficult for Bruce to claim that he was duly diligent in these circumstances. 95% plus likelihood that Bruce would not be able to claim that he's duly diligent. And then we see that the system has generated an explanation about why it's unlikely that Bruce is going to be able to claim to be duly diligent here. So canvasses the various considerations here. So you'll see we've got some observations, some explanation around background, and some about control, some about preventative action, some explanation about the remedial actions here that Bruce didn't take. And so this is really suggesting that Bruce really had a lot of control over the corporation here in these circumstances, and he was responsible for this failure. He didn't take the preventative actions that would ordinarily be associated with invoking a due diligence defense, and he didn't take the remedial actions that would have been associated with a due diligence defense. So you can see why Bruce is in a little bit of hot water here. It's going to be very difficult for him to claim that he was duly diligent under the Act here. Now we see some similar cases. So one of the things that our users say is that it's very helpful is the fact that Tax Foresight identifies the most similar cases from the case law. And so these are cases involving situations that are quite similar to the pattern of facts that we entered into the system here for Bruce. So, and one thing that's really striking about this list is every most similar case that we see here among these 10 had reached the same result, not duly diligent. So this is not looking good at all for Bruce. So, looking at this as a tax academic and as a lawyer, I'm thinking, okay, this is going to be a really, really tough case for Bruce to succeed in. If I click on the first case, what you'll see is that it's going to take me into TaxNet Pro. And I'm just going to load it up here. And you'll see it takes me right to the Hartley case. So here, takes me into the full text of the judgment. I'm just going to zoom out a little bit so it's more comfortable to read it here. And you'll see that we go right in, and these facts are likely to be very, very similar to the facts of the case for Bruce that we've entered in here. And this is a relatively obscure case. So this is one that hasn't been cited a lot by subsequent judgments, and it dates back to 1994, 95. It was decided September 7th, 1994. So this is a fairly old judgment, but it's one that is almost a perfect match for our situation. Now, you'll note that it's an informal procedure case, so query how much you're going to be able to rely on it, but you can still cite it as persuasive, potentially persuasive authority to the courts if you are trying to advocate for a position similar to that. So most likely the government would be the one citing Hartley and saying, look, this case is just like Hartley. It's just like Hartel. It's just like Western and the Queen. It's just like Glass and the Queen. This is very similar to these other cases. And in all those cases, the courts held that the director was not able to avoid personal responsibility in light of the circumstances. Okay. You'll see here, scrolling down, we've got a number of leading authorities. These are the cases that the courts tend to cite in this area. They're all, in this case, Federal Court of Appeal judgments. And how courts use these cases is they really use them as instances where the principles or the motivation lying behind the provision in the due diligence defense get explored by appellate courts. So they're really useful as general guidance about the law in this area. And so as an advocate, what you do is, you root some of your analysis in talking about the leading authorities, but then you invoke these similar cases, these very similar cases, as particular examples of how these principles get deployed by the courts more generally. One thing I can do is share the report with somebody else at my firm. I'm just going to send it to myself. Amazingly clear results. And I'm going to share that with myself, and I'll get that momentarily. I'll show you what the report looks like. So what I'll receive in my inbox when I check later is this PDF report that's now going to be downloading. The system's generating it. Now I've opened it. And this is the report that I will get in my email later. So it's outlining this result. It's the director's liability classifier. Bad news for you, Bruce. You're not duly diligent, really confident. It's got the date stamp here. It's got a unique ID, so you can find this sometime later if you need to. It's also saved under your profile on Tax Foresight if you're a subscribed user. Got the explanation of the result. These links are active in the explanation, so you can follow that through to TaxNet Pro. We've got the similar cases listed, uniformly not duly diligent. We've got the leading authorities linked to here. And then we've got a list of all the specific questions that were posed to us and our specific answers. So we know that the result in this case is premised on these particular answers. This is what Tax Foresight knows about Bruce's situation and what it's basing its prediction on. So this is the report that really is fantastic for documenting your care as someone who might be advising a taxpayer about their situation. And so here in Bruce's situation, you say, Bruce, not good news for you. Now let's turn to Ethan's situation. So let's say we're advising Ethan, not Bruce. So remember, Ethan is the chief operating officer of ABC Corp. And so it doesn't look good for Bruce. How does it look for Ethan? So we're going to go through these questions and we're going to basically change them where they deserve different answers because we're going to be advising Ethan now. So Ethan had a similar academic background to Bruce, also has a commerce degree, didn't have any limitations on his language abilities, doesn't have work experience in accounting, finance, or tax, but yes, was serving in a supervisory or managerial capacity, and yes, had some work experience in owning or operating a business. He was the COO, so clearly operating a business. Again, these corporation things are the same. ABC Corp was not a public company, small, fewer than 10 employees, wasn't suffering from any kind of medical condition at the time. So we'll continue on here. Ethan, like Bruce, wasn't the sole director. He was not a shareholder, so this one's different. So we'll change 2.2. We'll say no here. He was clearly involved in the day-to-day management of the corporation's operations. He did have the ability to sign checks or make payments on behalf of the corporation. He was not actively involved with the remittance obligation prior to the failure. There were no circumstances outside of the control of the director that made it impossible for him to fulfill the remittance obligation. So 2.7 is tricky. Let's keep the answer at no for now because there's no evidence that Ethan actively was misled by Bruce in the sense that Ethan didn't ask about payroll remittances. He didn't ask Bruce about it. Bruce, are you making them? Bruce, is this 300 grand that I'm contributing out of my own funds going to be sufficient to cover the remittances? It didn't occur to him, so he didn't ask Bruce. So arguably, Bruce didn't provide incorrect information to Ethan. On the other hand, you may say, well, Bruce's failure to mention it should have raised a red flag or kind of did mislead Ethan into thinking that Bruce was taking care of it. In the past, Bruce had always paid it, and Ethan might have assumed that Bruce's change in behavior wouldn't have happened without him being consulted first. So we could arguably say 2.7, you could try to construct a case to say that Bruce actively misled Ethan. So it's tricky. Let's leave it as no for now, see what that does to the result. Then we'll swing back and see how changing that to yes might change Ethan's fate here. Okay. Did he know about the financial hardship? Yes, he did. The corporation didn't have any failures with respect to taxes beforehand. Did the director make inquiries to another person tasked with responsibility for remittance obligations? No, he didn't. No, he didn't try to verify the corporation's bank accounts. Did he establish a separate bank account? No. Was he involved in assigning the corporation's tax compliance duties to another person? Yes, he was. So at the time of incorporation, Bruce and Ethan agreed that Bruce would take on the remittance obligation. So at that point, yes, Ethan was involved in assigning the corporation's tax compliance duties to another person, that is Bruce. So that one should be yes. Okay. Did the director bring the relevant tax obligations to the attention of others? No, he wasn't really thinking about it. He wasn't thinking about the CRA. He didn't make arrangements. He did personally contribute funds to aid the corporation in coping with the financial hardships. So remember, he dug into his own pocket, into his own savings, and produced $300,000 for the company out of his own. He made that loan to the company to give it some temporary liquidity. How many months did the corporation fail to remit? That's the same, 7 months, $30,000, same thing. Okay, and we're still thinking about the Income Tax Act and these payroll remittances. So we've changed a number of questions, a small number of questions, to change this factual context to capture Ethan's situation as a co-director here. And the question, again, is whether Ethan is able to shield himself from tax liability here on the basis of his relationship with Bruce and these differences. So let's see, can Ethan claim that he's duly diligent? Okay, so it looks like an 84% chance that Ethan is not going to be able to claim that he was duly diligent. So this is interesting. So Ethan was clearly of the mind that Bruce had this under control. Bruce had clearly had it under control in the past, but Ethan was equally aware that the company was in some really dire straits with respect to its solvency and its liquidity, and he didn't ask Bruce about the payroll remittances. So, this is one of those circumstances where, as a tax professional, I might say, well, I can see this both ways. So this seems pretty ambiguous to me. Bruce was kind of owning these remittances. Bruce didn't tell Ethan that he didn't explicitly tell Ethan or ask Ethan, should we stop making these payroll remittances? There was nothing of that. Ethan just didn't ask. It was one of these don't ask, don't tell kind of situations. And it looks like that's not enough to satisfy this due diligence defense, at least most of the time, under the Income Tax Act. So this is really, really interesting. I can see both sides of this, but it seems like the courts would mostly see the not duly diligent side to this. So again, we get the explanation here. Why is this the outcome? And again, it's linked to these various factors that were mentioned that we've already gone through. And this is a different explanation. So this is going to be a different set of explanatory text than we got for Bruce because it's different. We have some different cases here, right? So remember, we had the Hartley case. Now we have the LeMay case. We've got Clark, Ferrari. Like a number of these cases are different. So Western is, I think, the first one that I recognize that's the same. And it's not as similar as some of these other cases. So pretty cool. Like even with just those few answer changes, we're picking up entirely different case law here for us to spend some time on. And we'll go into the case finder in a moment and show you how to explore even more, because I don't have a lot to work with here. If I wanted to say to Ethan, like, let's find the case that's closest to your situation where the director was found to be duly diligent, I don't have anything to see. I don't see anything here among the 10 most similar cases. So that's where Case Finder can be really, really helpful. We'll jump into that in a moment. Before we go there, what I want to do is explore that question 2.7 that I kind of vacillated on. So 2.7, did the remittance failure occur or persist as a result of reliance on incorrect information from someone other than the director? So arguably, Bruce's silence here inferentially provided Ethan with some incorrect information about whether Bruce was making those payroll remittances. Now, it's sketchy because Ethan didn't exactly ask Bruce point blank, are you making the payroll remittances? But let's suppose this is one that you'd want to really try to see if you could make out something here. So if I'm an advocate, I'd say, okay, so let's see what would happen if I were able to get the court to say, yes, Bruce misled Ethan here. So Ethan received incorrect information from Bruce. Was the person relied upon aware that the information was correct? If I make that out, yeah, clearly Bruce would know that what he was telling Ethan was incorrect because he knows that the CRA remittances were not being made. Did the person relied upon have experience in the field relating to the incorrect information, business management, finance, or tax? Yes. So clearly Bruce, in that circumstance, knew that he wasn't making the remittances and did have experience with accounting and finance. And so if we could say yes to 2.7, I think it's very clear that each of 2.71 and 2.72 also get responded to affirmatively. Okay, when I click recompute here, it's basically going to take this new information, so 2.7 changing from yes to no, or from no to yes, and then 2.71, 2.72, and rerun the analysis and give us possibly a different result. So recall that when Ethan was not given incorrect information by Bruce, he was 84% likely not to be able to rely on this due diligence defense. Can he say that if he received incorrect information, if he relied on incorrect information from Bruce, that he was duly diligent? So here we're talking about the difference that Ethan says, are you paying the CRA remittance obligations? Are you satisfying those CRA remittance obligations? If Bruce says yes, and we can show that in evidence, that could be very powerful, or maybe not. Let's see. So we'll click recompute and see how important that is to Ethan's claim of being duly diligent. Wow. Okay, so that really flipped the result. So that's a really, really key fact here. If I were representing Ethan, this would be really important. So I would go out of my way to try to figure out how to show that Ethan had reasonably relied on incorrect information provided by Bruce. And so I'd be looking for witnesses. I'd interview Bruce, because that would mean that my client, Ethan, might be able to avoid having to make good this $30,000 in payroll remittances that should have been made that Bruce didn't make. And so you'll see here the explanation has changed. We have some more information here on control, and we have reference to the Reutelmann case, which basically says this is really contributing heavily toward a finding that the director was duly diligent. And so now we get the most similar cases here. We'll see we have a French case here, Gilbert, which is very, very similar on the facts, where the court actually said not duly diligent. That's interesting. We've got a number of other cases that are duly diligent here. So looking at this set of results, you might say, oh, but Ben, I see 7 of the 10 are not duly diligent. What's going on? The answer is, well, the classifiers are based on all the cases. So there must be lots of cases, not here, that are actually showing that overall the bulk of the authority is pointing to due diligence. And it could very well be that the machine learning algorithm is identifying this Reutelmann case as being a bit of an inflection point in the case law. So one of the advantages of using these machine learning algorithms is that it can take into account a time trend, the development of the case law over time, and how it interacts with these various considerations that the courts are looking at in making these judgments. So I would trust this result, and I would then also want to do some more research in CaseFinder. And so let's turn to CaseFinder now. You've already seen the leading authorities, you've seen the report, the sharing, I'm going to provide some feedback here before I move into CaseFinder, because I think this is fantastic, and I'm going to write that fantastic. I'm going to submit that feedback. The folks at Blue Jay Legal really like getting this feedback. Helps us to make the system better. So if you have an idea about how to improve things, we're all ears. So these similarity bars are coming out of customer feedback. This at a glance, getting the pattern of the case law comes out of the customer feedback. We're listening to you. Let us know what you think. Okay, now let's jump into the CaseFinder. So at the start, I mentioned there are 2 big kinds of things that we offer on the Tax Foresight platform. We offer these classifiers. And the way that I think about these classifiers is they're a way to get an objective, kind of independent synthesis of all the case law and what it means for your client's situation without prejudice, right? So you kind of enter the facts as you see them, and you can get a sense of what the likely outcome would be if it were to go all the way to court and to be decided by a judge at the tax court or federal court of appeal or even the Supreme Court of Canada. these case finders are a little bit different. The way I think about the case finders, that instead of being an objective kind of independent take on what the likely outcome is for your client, the director's liability case finder and the other case finders really provide an opportunity to locate the cases that are going to be most helpful to your client's case. So this is really an advocacy tool. And what is it doing? It's essentially filtering the case law to find those cases that have certain attributes that I really want to focus on. So let's suppose I want to advocate for Ethan, and I want to find the cases where directors in Ethan's position have been found to be duly diligent. So right now I'm focusing on those cases where the outcome is duly diligent, and there's tons, right? So it'll report the top 20. And by top, it means appellate, so it sorts by appellate judgment first, and then it goes through in order as we add additional considerations. So now I'm going to start filtering on the things that I know for sure about Ethan's situation. So Ethan has a university degree. He has experience as a supervisor and in operating a business. Okay, lots of directors with those attributes. So 9 different cases involving directors with those kinds of sophistication factors were duly diligent. Now, what about small companies? Okay, now we're only down to 2 cases, right? Already, where the individual was found to be duly diligent, and they match on precisely on these things. So that's kind of cool. Let's see if we can refine that further. Didn't suffer from a medically diagnosed condition. We still have these 2 cases, Priftis and Jeffrey. I can refine it further. He wasn't the sole director. Okay, now we've only got 1 case. So already I know this is the 1 case that is the match for this outcome. He wasn't a direct or indirect shareholder. Okay, now we've lost Jeffrey. So there are no cases that are exactly like this case. I can go through and add in additional things. Director was actively involved in the day-to-day management of the business, did have the authority to sign checks. And this thing is just going to keep refining the cases. Was not actively involved in the remittance obligation. Wasn't caused by an impossibility. Let's say he did rely on incorrect information from Bruce here. Did have indications that the corporation was experiencing financial hardship, no previous failures, did not make inquiries, didn't attempt to verify the remittances, didn't establish a separate bank account, did assign the corporation's tax compliance duties to another person, which is true here. Director personally contributed funds to aid the corporation coping with financial hardship. I don't think the number of months is really important, but let's just say, let's search for all those ones between 4 and 12 months. And let's say all the ones with between $10,000 and $100,000 of failed remittances. Okay, so what we've got here now is a collection of those cases that match on various of these features. No case is a perfect match. If we hover over that bar, we'll get a pop-up that shows us the things that it does in fact match on. So a case called Partno is the most relevant. DiLorenzo is also relevant, pretty closely matched. What if I want to focus on those ones that are just duly diligent, those ones that just have the outcome that I want? I can bump up the importance of the outcome here in the analysis. Okay, now I've got stuff I can work with. So as an advocate, I'm going to look at all these cases and figure out what arguments I can make about the similarities between Ethan's case and the case of these other cases. What's driving the courts here? What seems to be important? What seems to be the toehold? What seems to be the most important similarities between these cases and Ethan's situation that can really play up in my argument or even just advocating for my client with respect to the CRA in the early stages. So the case finder is a fantastic tool for finding those cases that might otherwise be very, very difficult to find, right? So it's really difficult to find cases with all of these attributes. You have to read hundreds and hundreds of cases potentially to locate the ones that really have the features most similar to your client situations. The case finder, what we're finding is people are using case finder a ton to find those cases that really allow them to powerfully advocate for their clients. When you're in a tax dispute resolution context. Also, it's really helpful if you're writing a tax opinion and you want to canvass both sides of the argument. You can focus in on those cases that are most similar, that present the most challenge to the position you're writing about in your opinion, or those ones that are most friendly to the opinion that you're writing. You can really find those cases and use them as examples of how the courts are thinking about those sorts of situations. So case finder, incredibly useful. Okay, so that's it. We do have some time for questions. So what I'm going to do is I'm going to go back here and I'm going to invite questions. We've got tons of attendees here. So please chat with me or send questions if you have questions. Totally happy to answer questions from you. As you're thinking about your questions, the questions you want to ask, I'm going to make this pitch, which is if you're eager to explore Tax Foresight, you can arrange a confidential and free walkthrough of Tax Foresight, any one of the classifiers that we have. You can send a text to 416-564-4696 and just text. It doesn't have to be fancy. Just send a text and say, I'm interested, or want to learn more about Tax Foresight or something like that. We'll get in touch with you. We'll send you a text back and we'll arrange a walkthrough. So we have a number of experts here at Blue Jay Legal on Tax Foresight who'd be happy to walk you through the software, maybe walk you through a director's liability classifier, maybe walk you through some other classifier. You may be interested, for example, to see the new capital cost allowance navigator that's being launched on Monday. So the CCA navigator is going to be really, really cool. It's going to operate a little bit differently than our existing classifiers in the sense that the CCA navigator kind of works like 20 questions. The system starts asking you questions and you answer them, and it allows you to refine the possibilities around what subclass of depreciable property your particular property would fall into. So it helps you navigate the CCA regulation schedule to find just the right class of depreciable property for that relatively esoteric piece of property. So, you know, if you want, you can get a walkthrough of the CCA navigator. That's really exciting. We also on Monday will be launching the extension of the assessment period classifier. So this is whether the CRA can go back to earlier years beyond the ordinary reassessment window under subsection 152.4 and basically reopen up those earlier tax years. So similar to the gross negligence classifier in the sense that it kind of depends on what the taxpayer's done. And so, again, like the gross negligence classifier, this new classifier on the assessment period is going to be based on hundreds of cases. That's going to launch. It's going to launch on Monday. Okay, so let's see. Questions are pouring in. So let's see. So somebody expressed surprise that Ethan's $300,000 personal contribution to the company would not be considered sufficient to get him off the hook. Yeah, that's. I mean, it's one of those things that Tax Foresight can help identify, and as something that might not be persuasive to the court. I mean, one of the issues is, or one response is, we didn't ask about the size of the personal contribution to the company, right? So that's one of the ways in which you need to exercise some of your personal judgment here. So You can imagine if Ethan contributed, I don't know, $3 million or $30 million, that personal contribution as compared with the $30,000 of unpaid remittances might sway a judge. So the challenge we have is in training these machine learning algorithms, there's not a lot of information about the size of those personal contributions from the number of cases that looked at it. So what you might do to analyze that sort of detail is go into the case finder and identify those cases where there was a personal contribution, then look at the quantums in those cases and see how that plays. So that's something that you could explore with the case finder and really drill down and see what's actually happening in those circumstances, and focus on those ones where personal contribution was linked with the director being held to be duly diligent. So that's a great question and something you can explore using the software. Okay. Another person asked, will this only be for tax law? Great question. So the answer is no. So we're planning to launch an employment product that does a lot of the same things as Tax Foresight, but for labor and employment issues that come up all the time in labor and employment law. So things like, how much reasonable notice do I need to give to an employee who's being terminated? Or what's the right classification of a worker? Is a worker under employment law going to be considered by a court to be an employee, or will they be a dependent contractor, or might they be an independent contractor? And a bunch of other things. So that product also has classifiers and case finders, and we're really excited about it. We're in the final stages of building the product, and so we're cautiously optimistic that we'll be bringing it to market soon. So keep your eyes trained on our website, bluejaylegal.com. If you sign up for our newsletter, we'll push that news to you about employment foresight, and you'll be among the first to know when it's available. Okay, somebody else has asked, how quickly is the group of classifiers and case finders being expanded? Seems like a limited number at the moment. Yeah, so there are 16 different classifiers as of today. As of next Monday, there will be 19 classifiers, and we're building away. So we are adding lots more classifiers as time goes on, and we're listening to the markets. We're listening to what people are expressing as being of interest to their practice. I think one thing I can say is we're addressing the cases that get litigated all the time. So these are cases that the courts see most frequently. These are the sorts of questions that folks are contending with in court. Some of the classifiers in our pipeline include this assessment period classifier, the CCA navigator, so the capital cost allowance navigator, also a Section 160 classifier, a number of GST, HST classifiers, so whether something is a single supply or a multiple supply is something that we're building. Whether something constitutes an exempt financial service, for example, is something else that we're building. So lots to come. And one of the nice things about our relationship with Thomson Reuters is we get really high-level aggregate data about the sorts of things that folks are researching on TaxNet Pro. And so we can make sure that we're building the classifiers that people are revealing that are of interest to them based on what they're researching on TaxNet Pro. So we can build exactly those sorts of classifiers that are most responsive to the market demand for the products, for research answers and products. So I have a bunch more questions that folks have asked. I'm sorry we're out of time. We're at 2 o'clock, but in conclusion, if you're interested in seeing more about Tax Foresight, interested in getting your own PDF report on one of the legal issues, one of the tax issues that the classifiers address, or even just want to poke around in the case finder on a specific topic, one of our lawyers would be really, really happy to take you through a walkthrough. Just send a text, say you're interested, 416-564-4696. Thanks very much for your attention, and a special thanks for those folks at KPMG who may be tuning in to the webinar in lieu of being able to make it there in person when we arranged